for a Q&A. So with that, I'd like to hand it over to Professor Ayman.
مساء الخيرات. السلام عليكم ورحمة الله. Good evening, everyone. It's always a pleasure to meet you all and talk a little bit about Fakeeh Care, our ambitions, our hopes and our achievements, as well as our challenges. I'm sure a lot of you have seen this slide or a version of it, but I think this really is important for us to keep in the forefront that we are an ecosystem that does all levels of care, from primary care to very advanced medical care, that does home care, virtual care, emergency medical services, academia, whether undergraduate, postgraduate, innovation, research, and operations. So currently we one capacity of 835 beds that is spread between Jeddah, Riyadh, and Medina. We remain to be a top-notch provider with very high quality services, and we're going to share today with you some of the new and most recent awards that testify to our very high standards of quality care. The CCHI, which is the regulator, as you know, of healthcare, private healthcare in Saudi Arabia, identified hospitals to be pioneer hospitals in terms of value-based care. They looked at multiple of more than 15 standards, and this is a new classifications. And Alhamdulillah, our hospital in Jeddah was ranked the highest, which is the pioneer hospital, with a score of 110% out of 100. And this award was given to the hospital in the most recent Global Health Conference in Riyadh. So we're very proud. We have been pioneers in reporting on patient-related outcomes. We've been pioneers in doing population health. And we have won last year's Golden Award in value-based care as well. Also, the hospital in Jeddah was awarded by the Surgical Review organization, which basically looks at details of the surgical programs. So as you can see here, things like 360-degree services, the medical operations, the doctors, the nurses, the expertise, the policies, procedures. So it's kind of an advanced accreditation, quality accreditation, and they go into each of these specific subspecialties and they look into details. And we were awarded this year that we are the organization that has the largest number of surgical specialties accredited in the world, actually. And we felt that that was a very an important landmark to share with you. Riyadh Hospital continues to grow very well. You will hear very good news on the financial front from Mr. Panos in a couple of minutes. But on non-financial or financial-related matters, the hospital has been growing significantly in terms of volume, outpatients, inpatients, and in terms of services. So hospital is now doing advanced orthopedic and spine surgeries, doing cardiac surgeries, cardiac caths, all kinds, started oncology care. But most notably, recently, we have opened our new state-of-the-art psychiatry and mental health ward. These are just some very brief pictures. This is the state-of-the-art psychiatry inpatient facility in Riyadh, probably in the kingdom. It's a very high level, done at very high standards. We have currently 18 beds that are covered with all these services, whether they're primary psychiatry services or ancillary and supportive. Top-notch, best-in-class doctors, nurses, and psychologists, social workers, and what have you. This is a very important national milestone, because there's very, very limited psychiatry inpatients in Riyadh, and this being a high level upper end yani rooms gives us a very edge on in this market. Next, please. Medina Hospital is rolling out very nicely. It's been very well accepted by the Medina community. We were there actually yesterday, and I saw how Medina people were very embracing this new and best hospital in Medina. It's you can see that the numbers of census, inpatients, outpatients is growing significantly. We have state-of-the-art doctors, equipments, machinery. We are about to launch one service after the other, and the only time limiting factor is licensed by the Ministry of Health. As you know, you can only license one specialty after the other, and we're getting ready to start our oncology and radiation therapy care, which is the only center in Medina that does that. Accreditation is underway. Training and residency also starting very soon. Soon, ending this year, beginning of next year, we're going to see the inauguration of Al Awali Medical Center in Mecca, which is a standard medical center offering primary, secondary, tertiary care, advanced diagnostics, but without admissions. This is going to be our first entry to Mecca, which will be subsequently followed by the Masar Hospital in a couple of years. This will give us access to our already heavily involved patients in Mecca. Very soon after that, the North Abhar Medical Center will open, probably end of Q1 or Q2 of next year. This will give us access to northern Jeddah and will capture a significant a number of our dear patients and guests that are currently traveling from North Jeddah to come to our hospital, and many of them are going to our Basatin center. So this is going to give us access to loyal patients to Fakeeh brand, as well as some other new patients who reside in this expanding area or region of Jeddah. Subsequently, probably by the end of the year, Al Zahra Medical Center will be ready to open, and you've heard this. This is a refitted shell and core building that has been leased from a Nari Group, and it will be the largest medical center of the group, with multiple specialties and some also new specialties. So Mecca and two in Jeddah, all hopefully to be seen in 26. And God help us, this is the plan for the group. You can see that the density of the medical centers as we go. It's a very ambitious and significant growth plan. These are all projects that are at different stages. Some are at the construction phase. As you can see, so initiation phase. So hopefully we'll keep pushing to improve services, improve access. Access is a very important part of any medical center, and they're all going to be in the same high quality, high patient safety, academic care, high innovation, high tech, and with a significant amount of training and investment in human capital. Next. Okay, so that's the fun part. So we go now to the financial part, and I'll give it over to Mr. Panos. Thank you all very much, and we're happy to answer your questions after Mr. Panos' section.
Thank you, Professor Ayman, and good afternoon, everyone. The group delivered a solid set of revenue and profits in the quarter and 9 months period, driven by growth in patients served across our facilities. Revenue growth momentum was sustained as the revenue reached 780 million in the third quarter, 9% up year on year, lifting 9 months revenue to 2.3 billion or 12% up year-on-year, driven by volume gains as the group served almost 480,000 patients in the third quarter and 1.4 million in the 9 months. Jeddah remained the anchor, Riyadh accelerated with new specialties, and Medina added an early lift. Growth during the quarter trickled down our income statement. However, as the group added and is ramping up in third quarter, but remains EBITDA for the third quarter and 9 months were 13.9% and 7.1% lower year-on-year respectively. More details between mature and new profits to shareholders were 7%, growing by 6% year-on-year. Thank you. In the next slide, we see the healthcare segment. The revenue growth was driven by a group-wide increase in the patient served and lifted the volumes, as we said, to 1.4 million. Group-wide in 9 months, outpatient visits and inpatient admissions rose by 8% year-on-year, translating into combined revenue growth of 7%. Here, I'd like to note that operational beds rose to 528 absolute number, which is 18% year-on-year. Riyadh expanded oncology and psychiatry and served 24% more patients year-to-date, while sustaining 8% growth in the surgical rate. And Medina opened the first 53 beds, finalized major insurance contracts, and is ramping up as planned, supported by strong patient. We'll have a slide for the Jeddah. Our Jeddah remains the largest revenue center and contributor to the group, with sustainable growth on patients served. In the third quarter, paid outpatient visits were up 4% across all facilities, and inpatient admissions also were up 2% versus the last year, the third quarter, while gross revenue increased by 4%. That said, year-to-date across all Jeddah facilities, outpatient visits and inpatient admissions grew by 5% and 3% respectively, and occupancy remained at 87%, which is a very high point, reflecting the demand of our tertiary services. In Riyadh Hospital, turning to Riyadh Hospital, we are pleased to see the continued positive momentum in the ramp-up and achieving the EBITDA break-even point. The hospital added 32 beds over the last 12 months, bringing the operation capacity to 103 compared to 71 in the last year, and the outpatient and inpatient volumes grew by 28 and 26% year-on-year, leading to year-to-date growth of almost 25% in patients served. Here, I'd like to note that the hospital's steep growth in its surgical capabilities. The hospital earned, we heard from Professor Ayman, many accreditations and performed complex surgeries, while roll out the beds for the mental health service and expand the oncology, and is preparing its IVF service offering, all of which will further diversify the hospital's patient mix and contribute to its sustainable long-term growth. Overall, we are happy with the occupancy of 64 to 65% on the 133 beds, as we added new beds in the period, compared to 71% in last year. Moving to education segment, where we'll continue to grow steadily, with revenues rising 8% year-on-year, driven by increased student enrollment and the average number of students growing by 6%, reflecting the sustainable appeal of our accredited medical programs. In tandem, the recently inaugurated Simulation and Clinical Skills Center in Jeddah adds capacity of almost 500 students, which we have already started to fill in during this academic year. On our cost base and gross profit, where efficiency gains partially offset elevated pressure from staff-related costs. Our cost sales increased 16% year-on-year in the 9-month period and reached almost 1.6 billion, taking the gross profit margin for the period to 23.3% versus 26.1% last year. However, normalizing for our new Medina hospital, the gross profit margin becomes 25%. We do operate in a competitive environment, and we continue to invest on the core, which is our people, who are the driver behind our expansion and multiple awards and accolades, and we will continue to do so. The increase in the cost of sales and gross margin dilution was primarily driven by the new business portfolio, as capacity continues to be front-loaded and under-absorbed fixed costs. Mention about this, leading salaries to revenue ratio from 38% to 41% in the 9-month period. However, our integrated operating model and ongoing case mix optimization help to cushion these pressures partially by controlling the spending on materials and consumables. On an absolute basis, gross profit in the quarter, excluding Medina, increased 9% year-on-year and by 7% in the 9 months, supported by the overall strong revenue growth in the periods under study. At the EBITDA level, the group reported the EBITDA of 125 million in the quarter and 375 year-to-date basis, or 7% lower from prior year. Pre-opening expenses and wrapping up of our state-of-the-art hospital in Medina, coupled with investments in CSR and higher provisioning for receivables, reflecting fortification of our balance sheet, compressed EBITDA absolute number and margin. Note that our EBITDA figure excludes our LTI program, which for the quarter it was 1.8 million charge, non-cash item, and 5.6 for the 9-month period. To further analyze our operational profitability when stripping away the new business impact from the group, mature facilities remain the earnings engine. Mature business generate EBITDA of 155 million in the quarter, 8 million less year-on-year, with an EBITDA margin of 22.4% compared to 24.9% in third quarter 25. For 9 months, the mature business generated 468 million and were flat year-on-year, with a margin contraction of 230 bps compared to 9 months last year, which is attributed mainly to the Jeddah business. The Hajj project, we came to a lower margin than our traditional business, and margin contraction in NEOM contract. It is worth noting that we remain cash generative as the group advance its investment agenda, and we expect the spread between mature and new business to narrow as utilization builds in Medina and Riyadh and clinical pathways mature. Next slide, you see our profitability. We are very pleased with mature business profitability, which supports the net profit and fueled growth of attributable profits to shareholders. Namely, mature business generated 52.5 million of net profits before 10 million of non-recurring provisions in the 9-month period, while NEOM optimization resulted to 11.5 million less profits. Our new business generated 33.5 million higher losses from prior year, 9 months, as Medina Hospital ramp up and hire most of the manpower and open for business, and expenses include the depreciation for the period since the hospital opened. And this also offsets the positive contribution from the Riyadh hospital year on year. As a result, net profit for the 9 months stood at 193 million, with 8.4% margin, almost 110 bips lower from prior year. Attributable profit rose to 226 million for the 9 months, up 6%, as almost half of the Medina losses are to minority shareholder. Medina opening was also the factor that Q3 attributable profits were 23% lower from last year, and adjusted for Medina, the group would be up cost and higher finance income in the period. In our balance sheet and cash flow, our strong cash generation continued in the period, and as a result, balance sheet remains a solid position as before, closing the quarter with a net cash position of 37 million. Including leases, the group net debt stood at around 470 million. Cash and cash equivalents, including the 197 million of government sukuk, stood at 588 million, up from the 474 in the previous quarter, as gas generated from operations exceeded amounts deployed toward expansion and working capital. On a trailing basis, our net debt to EBITDA ratio was zeroed, excluding leases, or 0.95 times, including the lease liabilities, retaining meaningful liquidity headroom through a combination of cash on hand and drawn facilities and strong generation from our mature platform. We remain comfortable with our funding, ongoing growth in Medina, and the group's other growth initiatives with the balance sheet capacity. Thank you for your attention, and I would like to invite you for the Q&A session.
Thank you, management, for the comprehensive overview of the company's performance during Q3 2025. With this, we will open the floor for the Q&A. If you wish to ask a question, you can click on the raise hand icon on your webcast, or alternately, you can type in the question on the chat box as well. I will wait a moment for the queue to line up. Our first question is coming from the line of Ms. the company before asking your questions.
Thank you, Prof. Ayman, for the presentation. So I noticed that the total number of patients in Q2 did not change in Q3 as well. However, you indicated that revenue marked the growth. If you can shed the light on future plan for this Jeddah facility. So future organic growth will be coming mainly from favorable case mix, or maybe potential price increase, because inshallah we're standing at a utilization rate of almost 87%. That's quite healthy for hospitals. That's first question. And second question is, if you could provide some insights into your how can the integration with the Mohammed Fakeeh Hospital enhance your brand equity and positioning in the central region? And additionally, I know that's quite early, but what percentage of ownership are you targeting in this transaction, and what will be the chosen financing structure? Equity swap, cash? How are we looking at it? Thank you.
Panos, I can answer a couple of pieces, and then I'll leave all the more details to you.
Sure.
Thank you very much. You always have great questions. طبعا, for the first question, I think Jeddah Hospital is, maybe I would say it's three parts. There are services that are very advanced and only provided in this hospital, or maybe one other hospital. So that's going to continue to grow. Things like oncology, advanced oncology, ICU, robotics, organ transplant. space, and that's why we are expanding with the surgical tower and with the new hospital and with the new centers to try to expand our dominance in these high level. There is really not much of competition at that level. And then there is the regular care, and I think that is we're pleased to say that that's maintained or growing in spite of the very aggressive competition in Jeddah now. So what we need to do is to continuously renovating the hospital, improving the parking, improving the access, and accelerating our other projects, which will give access to patients to maybe a more easier, faster care in terms of parking, entry and exit, improving the RCM functions, IT app, so improving the patient experience. The third piece is basically what can we do in terms of retaining our talent and attracting more talent, because that's going to be the very important third pillar. So continue to capitalize on the high complex care, which we are really good at, improving the patient experience with the middle or the regular care, continuing to hold, empower, inspire our talent, and retain them and get more. So that, in a nutshell, maybe the Jeddah thing. I'll just ask briefly about Riyadh, and then I'll leave Panos to discuss some more details of this possible acquisition. We're very excited. We think it's a very important step for us to expand and improve our market share in Riyadh. The plan is to get a majority stake in the hospital. I can't really specify how much that's going to be, but it is going to be the target is that it's going to be a majority stake. We feel this hospital is an excellent hospital. It's strategically located. It has excellent clinical standards. It's already profitable. So we're very hopeful that this will turn out to be an important acquisition. Of course, this is going to expand the bed capacity in Riyadh, but it's also going to give us access to East Riyadh, to more Class B as well, dear patients that we'll be happy to serve. And of course, there are potential synergies at all levels, as you can know. So maybe I'll stop at this stage, and if Panos wants to add anything else, Tfadal.
Yeah, thank you. Sal, for Jeddah, yes, indeed we have very high occupancy, but we still have some of them in the next year. Of course, but the hospital is set. I mean, and we're very keen to expand the capacity, as Prof. Ayman mentioned. On the same time, our team is doing an excellent job at the ground, increasing more day surgeries, and all the flow of the patients. I mean, they're very, very efficient. We wait early next year to open our Abhur Medical Center, who's again will be very, very nice and very nice location in Abhur, which is getting quite busy. The city is expanding towards the north, and this will help us to grow the Jeddah patients served. And towards the end of the year, we're going to have our Zahra Medical Center. This is 50 to 60 examination rooms. We have a lot of services to offer in that location. So, and we hope that the location, B, the brand, third, the quality will help us to have a good start. For Riyadh, we said even from the IPO that we want to grow. Riyadh is strategic. Only one hospital in Riyadh is quite small presence. So we are keen to add this hospital if the transaction is completed. Is a good match, as Prof. Ayman mentioned, and it's positive. From the finances of its owners, is a profitable hospital, so also will add to our current profitability. But we cannot say more. What we can say is that we're not looking to do like a capital transaction, issue new shares or whatsoever. We have a lot of debt room, so we're going to use our balance sheet and take advantage of the movement in the interest rates and finance the acquisition when it will happen. Thank you.
Thank you, management, for the detailed brief on this. Again, if you wish to ask a question, you can click on the raise hand icon on your webcast, or alternately, you can type in the questions on the chat box as well. We will take some of the questions that's coming during the chat box. This is coming from Marina. Marina is asking, she's congratulating you on the nice set of results. And then she's asking, could you please provide guidance on revenue and gross profit margins, net profit after minorities for 2025, as well as your outlook for 2026? In the same thing, she's also asking, do you expect any improvement in the gross profit margins in 2026? She has one more follow-up question, but I will ask that after you have already answered these two questions.
Thank you for your questions. We are progressing towards Q4, and you know that we cannot talk about future periods. We're not going to open any center in the Q4, but in next year, early year, we're going to have two medical centers, one in the Ophir and one in Makkah. So we do expect some pressure on the margin from the hiring and ramping up. So pari passu with everything else, this will be a negative in our margin. However, Riyadh would continue its trajectory, we expect, and Medina ramp up. We'll see gains every month. Although, you should be aware that typically first quarter of the year is weak due to holidays. So we should be cautious of that. So if any improvements, this will become in the second part of the year. But this is what we can say from what we know today. I hope this satisfies your question.
Thank you, management, for this. She's also asking, what is driving the increase in minority losses? Do you expect any reversal in trends?
Minority loss, I thought we explained, it is mostly from Medina. Our Medina hospital, we own 51%. So we absorb 51. The rest, the 49, belongs to minority shareholders. Thank you.
Thank you, management. With this, we will now move on to our next set of questions, which is coming from the line of Mr. Yasser. Yasser, if you can unmute yourself locally, introduce the company before asking the questions.
Jamie from Nahdi Holding Company. I have two questions from my side. My first question, we heard a lot from healthcare provider that they pay 1% fee on MOH related revenue under Nafis. Is it a permanent regulatory change or still under discussion? This is my first question.
Even if this is the event, our billing for MOH cases is small. It's very small part of our business and is immaterial, the 1%. I mean, although MOH is small, I think it's lower than 4%. So 1% on 4% is quite significant.
Okay, my second question is regarding the rejection rate. Do you notice that the rejection rate in this quarter going up?
Rejection rates are not driven by quarter. Rejection rates, I mean, we wish rejection rates are zero. This is our target. Rejection. We should not have rejections. Nevertheless, we do have some claims that either pass through the submission process. Very, very different reasons. We strive every quarter to improve our processes. We're very close collaboration with our partners, the insurance companies. They issue reports. We discuss the reports with them. But ultimately, rejections are crystallized when you sign the final reconciliation. So we haven't signed any reconciliation in this period. So we have nothing to report as a change. So I hope this satisfies your question.
Yeah, clear. Thank you, management.
Thank you. We have our next set of questions. This is coming from the line of Mr. Talha. Talha, if you can unmute yourself and introduce the company before asking the question.
Company. First of all, congratulations on an excellent set of results. Quite a few of my points have already been covered, but there's one point that I'm seeing that it's not been discussed lately. It's about DRG. How is it panning out? What are the developments on it? And has there been any indication by the government as to when it will be implemented?
Maybe I can just say a couple of words, Panos, and then I don't think there's major change in terms of regulatory environment. We haven't heard at least anything. But you remember I showed the award that we were given. That is kind of related to being ready, and you saw the score there, 110%. We seem to be ready for any form of value-based care. And as you know, DRGs are only one form of value-based care. We keep on investing in our IT, so we're optimizing our coding, recording, documentation. We are improving in our costing. We have multiple committees working on optimizing costing and coding and billing. We keep investing in coding. In fact, if you look, one of the standards of this award is the number, percentage, and quality of coders, because that's critical in a DRG, and when we scored high in that. So I think we are kind of ready and trying to get better and better at this. But I'm not aware of any new regulations or any dates or any setups of when DRGs is going to happen or how it's going to happen. Meanwhile, we continue to shadow bill in different locations and experimenting with multiple pathways. Panos, anything to add?
No, just that we work closely with our partners, the insurance companies, and we try to find also services that we can expand the value care-based model. So this demonstrates that both parties, I mean, we are committed to optimize care. Thank you. And good to hear you, Tara.
Thank you, management. Now we will be taking some of the... I think he just replied back to on the Q&A. Thank you. We'll now be moving back to some of the questions in the Q&A chat box. Kiran is asking reason for decline in EBITDA of NEOM contract.
I mentioned in NEOM, I didn't hear you well, in new contract or NEOM contract? Is it NEOM contract?
It's NEOM contract.
No, okay, thank you very much. Look, NEOM Hospital is state of the art. It's 50 beds. We have a lot of specialties serving the community at NEOM and even closer to Tabuk. We receive a lot of patients. It's fully contracted with all insurance companies. So, and in addition, NEOM operates the medical center within the community. Nevertheless, NEOM has to optimize, like every company, the spending and in the facility. So we try to reduce somehow any not necessary spending. And we had also some challenges with accommodations. You remember we mentioned our previous results. So this also is a factor that affecting the margins. But nevertheless, we're working together with the NEOM management to optimize the contract and move also to the next level, which is for the next 2 or 3 years. So this is where we are, and we might have something to announce in the next period or so.
Just a follow-up, NEOM as well. The Kiran is asking, are you planning to open any new beds beyond the current 50 beds?
No, at this stage.
Thank you. Taha is asking, 9 months 2025 gross margins at 25.1, excluding Medina, was lower compared to 26.1 gross margins in the same period last year. Can you shed some light? What is considering improved margins from despite considering improved margins from Riyadh Hospital?
I didn't get exactly the question, but I will try to explain. We said we have mature business and new business. And if you even exclude Medina, we still have a margin contraction of 1%. The reason the margin contraction is elevated salary spending in Medina, in Jeddah, to retain our talent and to expand our offering. Second, I mentioned that during the 9 months, we had the revenue from the Hajj project, temporary project during the June, which came at a lower margin, much lower margin than our existing business. And third also is, as we just mentioned, the optimizing of the NEOM contract. So these 3 main factors are supporting the 1% margin contraction in the gross profit.
Thank you, management. That was quite clear. There's a follow-up question from Ahmed. Can the company please repeat the guidance for 2025 revenue, EBITDA, net profit? Thank you.
We are reluctant to give guidance. We see our progress during this month. So typically Q4 is a strong quarter due to weather. Traditionally, Q4 is stronger in claims for us and the insurance companies. So we don't see any surprises at this moment. So we expect Q4 to be, let's say, at par with Q3 or even better, given that a stronger quarter in terms of revenue. But this is just an expectation, is not a forecast. Thank you.
Thank you, management. Again, there's a question that's coming from Sikat. He's asking, what are the criteria to open more beds in Riyadh and Medina? Can you also shed some light in change? I think you have already mentioned his follow-up questions about NEOM and current EBITDA. So I will just keep the question just to what are the criteria to open more beds in Riyadh and Medina? Given you've already answered something about NEOM.
There are general guidelines, some clinical and some regulatory and some maybe financial in general. So clinical is depends on the and the need. Yani what services is required by some services. There's interdependencies. For example, you cannot do let's say a contrast related procedure without having مثلا nephrology service or have cardiac catheterization without having cardiac surgery and so on. So there is some clinical needs and demands. That's one. The other one is regulatory, is license. So to open, let's say, an IVF unit, you need to have special manpower. Without them, you cannot open. So we start by looking at the community need, and we have studies and feasibilities on each hospital, depending on its location, depending on the city and the need. And then we go to clinical requirements, then regulatory requirements, and then finally we go to financial requirements. And as we explained a number of times, and we've learned from you guys, the difference between greenfield and brownfield projects, and you have that flexibility to control the expansion and the bed opening in a brownfield hospital or project, less so in a in a greenfield, less so in a brownfield. So there are multiple factors, but the instinct, it's like the car that you put the pedal, and even if you don't put the pedal, the car is pushed forward. So the general natural instinct is to operate all the beds. There is a baseline cost for even an unutilized bed, as you know, in terms of CSSD and infection control and maintenance and so on. So the natural inclination is to open the entire hospital as fast as possible, but then these factors and some others will dictate so on. I think in Riyadh, we're going to continue to open and push. We're at the final stage of whenever we open and we get license, we're at quite significantly high occupancy rates. But again, let's say if you open, let's say 40 more beds, you need, let's suppose, this number of nurses. So you don't want to hire nurses early and then get the license delayed and then incur the cost. So these are some of the factors. There's so many other factors that goes into it.
Thank you, management. There's a fun follow-up question that's coming from Mr. Yasser. Again, if you may answer this, have you seen any increase in patient volume during November due to seasonal flu waves in Saudi? And is this trend will continue in December?
Which season? Which season, sorry? You said?
Flu season, flu wave.
Flu. Oh, okay. Yeah, go ahead, Panos.
No, I don't have the answer. Apologies. I'm not aware.
Most flu patients don't get admitted, but I don't think we have this data. We're happy to provide it if we find it.
We can do a follow-up on this, but
Yeah.
we do have we know our activity daily, but I don't think we can attribute to something to flu. But we'll check. We'll come back to you.
Again, there's a follow-up question because there's a couple of questions coming in for Medina, so I will club a lot of them together. So there's a follow-up question that is coming from Kiran. We understand it is too early, but is the initial uptake of Medina in line with your expectations?
I will take this. Look, Our expectations are sky high. We're very ambitious and very proud of our brand. So anything less, we're not happy. But being realistic, uh, as Professor Ayman mentioned, the way you ramp up a hospital is what you offer also, and plus the demand from the community. So we see a lot of demand from community. We are careful to build the manpower, the right mix of the doctors and the specialties, and is a building block approach to ramp up the hospital. So we started with the basic services, pediatrics, obstetrics, and cardio, and now we're progressing. There are a lot of things that we offer, and we are very pleased with the footfall. We will grow our acuity as we add more services, but and we don't try to avoid the question. We're happy, but we want more time to be sure that we are successful. So it requires some time. Don't forget that we open in end of April, 1st of May, and insurance contracts also took some time to complete. So we still at early stages.
Okay, thank you. Just a follow-up on Medina as well. There are a couple of chat boxes. I will combine them together. They're talking about what are your expectations about EBITDA and net income break even for monthly. I think what are when do you expect it to do an EBITDA and net income break even?
We offer forecasts and estimates in previously, and sometimes we don't fulfill or they don't come on time, and we disappoint ourselves and of course the investors. Nevertheless, we are, as I said, we're pleased how Medina is progressing, and it's greenfield hospital. So it's you can control the expenditure easier than a brownfield hospital, which was Riyadh. We are optimistic. Again, give us some time, but always Q4, as I said, is traditionally a strong quarter. No, not much holidays and a lot of flu epidemic or people getting surgeries. So probably next year we're going to be either close to break even, or we'll see. But this is the goal. As I said, we put high standards for ourselves. Let's see if we're going to achieve them. Thank you. Aman.
Just staying on Medina, can you tell if there's any pricing differential between Jeddah versus Riyadh? Sorry, Medina versus Jeddah or Riyadh, or pricing similar to what you see in Jeddah?
I will take this also. Look, every city has different price list and reflects the purchasing capacity of the city. Also reflects the premium pricing by the insurance companies. So definitely metropolis like Riyadh or Jeddah, the prices are higher, whereas in other cities, Medina, Abha, let's say less smaller population, the prices are lower. So we do have lower prices in Medina compared to Jeddah and to Riyadh. And this, I think, applies not only to us, it applies to all hospitals. And this is how the insurance companies are pricing the business, the policies originate from the area.
Thank you. We will now be going back to verbal questions. If Madhu, if you can unmute yourself locally and introduce the company before asking the questions as well. Madhu? Madhu, if you can go ahead, please.
Hi,
Hello.
Yes,
hi,
Madhu,
Mr.
now we can
Panas.
hear you.
Hi.
Good
Thank
evening.
you for the opportunity. Before I ask my questions, I just wanted to thank you for the details that you provide, because very few hospitals, share this level of details, especially on a quarterly basis. So we have the patient numbers for Riyadh as well as on aggregate level. It would be great if you could share some insights on the revenues for Riyadh, and the split, if possible, inpatient and outpatient, because I remember in your IPO presentation, the inpatient revenues for Jeddah was significantly high because of the mix of complex surgeries. I would say perhaps highest in the sector. So, what is the case with Riyadh Hospital? Are you closer to your Jeddah Hospital when it comes to inpatient per revenues? If no, then can we expect you to go closer to that level? And how and by when? That is one. Second, as we all know that staff cost in Riyadh is on the higher side compared to Jeddah. So let's say you achieve optimum utilization at some point of time and you open all the beds. Is there a possibility that, even in that case, your EBITDA margins for Riyadh could be on the lower side compared to Jeddah? And if you can, manage to get it closer to Jeddah, how would you do that? So these are my two questions related to Riyadh. Third is on capex, which if you're okay, I'll ask on capex, because you have made changes to the opening of hospitals in terms of timing. So if you can explain capex and your rationale behind acquiring Fakeeh, if we go by the recent press release.
Wow, excellent bunch of questions. I wish we had 1 hour to answer them, but they're very good questions. Thank you. Look, you're referring to, let's say, average rate per visit or per admission, and this reflects the acuity and the service offered in every hospital. Correctly. I mean, Jeddah is almost 48 years now. It's very, very advanced. It does them. It has the highest skill in the western part of the country. We do have a lot of acuity and ICU beds. So definitely the average per admission is one of the highest. And revenue per bed also across the kingdom. Riyadh, it's following the path of Jeddah. And this path is a long path. It's not 6 months or 1 year. We are growing our surgeries, as we reported, 80-90% year on year. Now we need to grow not only the number, but also the acuity, the complexity, and this is what we do. We look at the surgeries that are on demand and they're very high on the skill, and of course they allow for higher charges. Also, we are progressing with the utilization of our ICU unit in Riyadh. Also is in high demand, and this is helping us to grow. Is it the same with Jeddah? No. Also, it's not the same because there's also either a price difference and also the mix is not there yet. But we had all the accreditations, and now, I mean, there's a path. We have CAP accreditation, we have HIM7 accreditation. All these are helping you, to increase the average rate of the admission. In terms of outpatient, it's not very far one with the other, but the patient is the main difference. And also the same applies to Medina. Medina, I mean, if you start, let's say, with pediatrics, or you start with gynae, you cannot have a high average revenue per admission. So you need to go to other specialties, cardio. I mean, if you do heart transplants or robotic surgeries, then you can definitely have a higher revenue per admission. And this is where Jeddah is on the forefront.
Right.
Now, but also you made a very good point that if your revenue is not the same Jeddah and your salaries are higher than Jeddah because I don't know, accommodation cost is higher in Riyadh and you need to pay a bit more. Yes, this is a challenge for all the operators in Riyadh to deliver margins in the city. Yes. So you need to utilize the scale. So scale is very important, and make some benefits from costs that are not city related. So there, if you do economies of scale and you manage and you control this cost, you can support the margin also in these let's say uh, demanding cities or with elevated salary cost. On the capex, look, in the capex we keep spending a lot of money. We are finishing 3 medical centers, and we're starting also in Riyadh the other one. Timing of projects, you are right, is very sensitive to licensure approvals. We had a lot of challenges from various municipalities to approve the designs, approve the facades, even the facades. So this process takes some time, and this is why some projects are a bit delayed. We'll keep focus on these activities, and we want to progress with the other 2 projects, the expansion of the college in the Jeddah, also the surgical tower. I mean, you heard where our occupancy is very high, and we wish we had more beds to offer to the community here. So we need to add the capacity. So we believe me, we're pushing every day, but it is what it is, and we're a bit behind. Now, do you have a question for
Yes.
Riyadh? You said yes.
Thank
What
you,
was the
Mr.
question?
Panas. But if you can quantify it, I mean, thank you for the detailed insights. But is it possible for you to quantify the inpatient and outpatient mix in Riyadh, the revenue, and what is it that you're making per patient in Riyadh at the moment?
We cannot disclose this information. No, you understand? I mean,
Okay.
we already disclosing too much actually, and we are. I don't think anyone else of our peers provides such open books,
Yeah.
so people can appreciate our efforts and our performance.
Yeah.
But there are
I
some,
agree.
some limits, in
Yeah.
terms of sharing
Sure.
information.
Sure. Yeah.
But as I said, we are not there the same with Jeddah, but we are progressing, and we wish it was the same every city, but it's not. And we have to be agile and adapt and deliver.
Sure. Is it possible to quantify the capex at least next 2-3 years or next 4 years capex?
We will share with you after the call, if you don't
Okay.
mind.
Okay.
Yeah.
Fair enough. Thank you.
And,
That's all
and
from my side.
we will mention also on the next call so everyone can be transparent. But again, the high level, we're completing 2 medical centers early next year, and the third one, although it is built to suit, we still have some capex to do in terms of equipment and other small things. But we're progressing with the Makkah hospital, and we're finishing the design, and we need to move to the next stage of our Obkhor hospital. So these 2 will start demand some additional capex, but There are many projects, and it's better if we organize it and share it with you in a meaningful manner.
Thank you, management, for the detailed answers for all the questions and being patient with all of them. Given that we are already 11 minutes over our dedicated time, we will end the Q&A sessions now. And again, if all the any questions that have been left unanswered, we can arrange the detailed sessions with the management of Fakeeh Care. For now, we will end the Q&A session. I will hand it back to the management for the closing remarks.
Maybe Walid, from my side, thank you very much. It's always a pleasure and an honor, and we're very happy to host you in our hospitals, to do more calls, to respond. And Walid has been quite busy interacting with many of you. This is a strategy for Faqih. We learn from you, and we enjoy the interactions, and we feel that this is a national mission, a humanitarian mission that we would love to share with all of you. So please keep Walid busy, and he will keep us busy as well.
Thank you.
Thank you. With this, we would like to thank the management of Fakeeh Care to take the time to conduct this call. We would also like to thank all the participants for attending. We wish you all a very pleasant day. You may all disconnect now. Thank you.
Thank you.